Good morning, guys. July 9th. We're going to talk about bear volume characteristics by looking at a few charts. So, Exhibit 1, Apple chart, highly bearish volume characteristics. And we're going to elaborate on this in just a little bit on a few other charts. But if we're just to look at this chart, so there's some healthy volume, stock moves higher. Some more healthy volume, stock moves higher. Now, some very, very unhealthy for the continuation higher sell volume bar right here. Now, if you were to combine this and this volume, it's still not as much volume as we've had here on the sell side. Now, the sell side right here was between 211 and 207. Now, since then, from that level, if we were to combine all of this volume over the course of last 2 weeks, it still does not add up to the sell volume in this bar. So if you look at this carefully, what do you see? Yes, we're referred to as the middle finger action. Basically, the volume is telling you that bulls are fucked, okay? And this tiny ass little volume right here that you see, normally in 99% plus cases will resolve into a major reversal. And the reversal is going to be to the mean or below sometimes. So meaning that from 227, and guys, potentially pre-market, I don't know, Apple may be trading even higher. It could be at 230, okay? But 227 could be reversed all the way down to 210, meaning if you get a chance to short it at 230, okay, all it's going to take is just some sell volume to bring this thing down to its knees. And so considering this is, let's say, top 10 stocks have been moving the indexes higher, or they really have not been moving the indexes higher. They have been sustaining the indexes from dropping. So if we take a look at Apple, okay, there is no volume. Why would there be such a low volume, Leah? Well, because you have to be an absolute idiot to still buy the market at these highs. So those people that are doing it, thinking, well, every day something goes up by a couple of points higher, that this is a really good bull market, they're highly mistaken, because it's not going to take much volume to reverse this. So to show you what actually takes place when you notice some volume characteristics like this, now understand this, just because you have such a strong volume characteristic and after that something shoots higher continuously, okay, it does not necessarily guarantee the day or the exact hour on which the reversal is going to happen. But the longer this goes on, okay, the closer you are to the moment where that reversal is going to take place. So considering we trade weekly options, the reversal could have taken place yesterday. The reversal can easily take place today. But at some point this week, okay, July 9th, July 10th, July 12th, July 13th, this week, it could easily be all reversed in a profound way. So if we're to glance historically at some things, let's go ahead and show you. Let's just go ahead and look at the index. So S&P 500, let's pull that up and see what's happening here. If we're to go back in history and study just off this chart some of the volume characteristics. So as you can see, pretty average volume. Then a spike in the red volume. Now, it doesn't necessarily produce a sharp drop immediately, but within the few following days, do you see this? Okay, the market drops from 4,500 down to 4,200. So it was all preceded by this huge volume bar. Now fast forward to this situation. Huge red volume bar. What happens? Nothing happens, right? The S&P 500 keeps going higher, higher, and then what? And then it drops. This illustrates the point that at times when you have such a huge volume bar, you may be just a day or two from a much bigger drop. Sometimes it could be a couple of days more. In this instance right here, you have a huge red volume bar, the middle finger action as we call it here at 13 market moves. What happens? After that, the market goes 1, 2, 3, 4, 5 days higher, followed by a small drop, 1, 2 positive days, 1, 2, 3 negative days, 1 positive day, and basically that's when the big move happens, okay, from 5,200 all the way down to closer to 4,900 range. So this is an early indication that a big move lower is coming. And guess what we got now? We got a double middle finger action on S&P that coincides with a big middle finger action on Apple. So what are they? It's 2 plus 1. I got a triple middle finger action going on, and the market is still edging slightly higher yesterday. Yeah, well, that shit ain't gonna last. So basically, from the last two bear volume signs right here, the market goes high 1, 2, 3, 4, 5 days at this point. So could it go high another day? Sure. Could it go higher another couple of days? Sure. But we're very, very fucking close to a major reversal here. And so, as you can see, if we study the history of these reversals, once the reversal begins and everybody realizes, oh shit, that's the reversal, normally by the time people catch on to the reversal, we're already cashing out on our put options, because when do we buy put options? Well, we buy them yesterday, we'll buy them today with this week and next week expiration, guys. So by the time this reversal is going to be apparent to everyone, it's going to be too late, okay? Because guess what? People don't want to buy put options right here. They want to buy them when? Oh my God, shit is dropping. Well, let me buy them now. So they're buying them now, and this is the area where we are selling our put options to the people that want to buy them here at a much inflated premium. So understand, so the volume characteristics, they are a predecessor. They're in a way a leading indicator of what will be next. So we're to take a look at Bitcoin, BTC USD. Same volume characteristics, guys. Okay, look at this. Middle finger action. What happens after that? 1, 2, 3, 4, 5. 5 days higher. Red day. One more day higher, and then after that, a flush. Like how many days lower is that? I mean, that's almost a week lower, right? Get same setup again right here. Moves higher like 6-7 days, followed by move lower, slight move, and then consecutively, right? And now we're just getting the middle finger action again. Where? When everybody says there's no way Bitcoin can go lower here. You get middle finger action right here, right in your face, okay? What does that mean? That means the area where we shorted, now we shorted Bitcoin like multiple times recently, right? We shorted it here, closer to the $70,000 range, cashed out right here on the drop, shorted it at 64, cashed out right here, not entirely, still holding some puts. Okay, I hope it bounces to like 58, 58.5 today. That'll be another entry, because this middle finger action, guys, sure, I hope we get a bounce so we can buy more put options, because ultimately what this is telling us, all right, as you can see, Bitcoin has been at these levels before and people were buying it instantly. So the moment it dips here, they buy. The moment it dips here, they buy. The moment it dips here, they buy instantly. This time, if it's going to stay here under this orange line for like a few more days, it is over. Okay, there's not a probability, if we stay under the orange line for a few more days, there's not a probability that Bitcoin will not first drop lower. So 49.5 is where we're looking to go calls on that, guys. But very important is this. So basically, guys, as Bitcoin goes lower, there's less and less buyers that are interested in buying it. See, in prior instances, when it dropped, it basically rebounds right away. There's no delay. It drops, rebounds right away. Another drop, another rebound, no delay. This time, there is a delay. Why is there a delay? Well, before it was considered a hot bargain on a pullback from the highs, when it retraces back, it's buying the dip. Pump, dump, buy the dip. As soon as it dumps, there's a lot of market participants that were interested in buying the dip because the hype was such that, oh my God, well, we're so close to go to 100K. We're going to be at 150, right? Well, now, okay, it dropped so many times and the rhetoric, oh, it's going to go much higher to 100K. People have been waiting patiently, and people lose patience if the trade does not go in their direction within a certain amount of time, within the expectations. So now that it dips, people are like, fuck it, I bought the dip here, I bought it here, and I bought it here. And they're like, man, where am I gonna, like, you're gonna hear a lot of crypto guys talk about, well, I'd like to buy this dip, but shit, I already used all my money to buy it right here, and right here. So people don't have money left to be buying this dip. And guess what? The big institutional investors, the way they're buying, they're going to buy a little bit. If it drops some more, they're going to buy some more, and they're going to keep buying because they got deep pockets. Okay, as an individual trader, investor, if you bought the dip here, here, and here, you're not buying the dip here anymore. And guess what? Most of the people that bought Bitcoin right here at 72, 73, 70, 68, when we clearly told you don't fucking do it, all right? All of these people, if Bitcoin drops just a little bit more, guess what they're going to be doing? Well, they can't buy the dip, okay? And at that point, they're going to be staring at this, and they're going to be like, fuck it, I'm selling. And that's what's going to intensify the selling. So there's going to be another leg lower in Bitcoin. And for some reason, people are like, well, Leo, if you think that, shouldn't S&P drop? Yes, if you study the historic analog dating back to 2017 of December, when Bitcoin drops from 20,000 to like 12,000, within 29 days, the whole market drops. Okay, so there is a correlation, but it doesn't. So when people ask me like, okay, well, Bitcoin's dropping, why is the market not dropping? Well, the market has got a delay mechanism. It doesn't necessarily have to drop on the same day Bitcoin is dropping. It doesn't have to react to what Bitcoin has done so far. But guess what? When Bitcoin does drop to 52, 50, when it's going to be under 50 briefly, 49, 49.5, yes, the market will react. It just has not reacted yet, which makes short in S&P, short in NQ, your tech futures, your big tech, all that stuff is timing. It's timing stuff before it drops is how you make money on puts, not when stuff is already dropping. So right now, let's take a look at a couple more ticker symbols. Okay, Microsoft. All right, Microsoft is in trouble. It is the same damn chart as Apple, right? So look, some strong buy volume, strong buy volume. And now, over the last 3 weeks, okay, even though the stock continues higher, it is this part right here from 430 to 470, it is produced in such a low volume because there are less and less people willing to buy it at these levels. Just as there are less and less people are willing to buy Bitcoin now at the current levels when it's dropping, with the exception that less and less people in Microsoft are willing to buy it at these high levels. Why? Because everybody bought it here, and they 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 bought it fucking here. There's nobody else left to buy this shit. That's why it's gonna drop. So, and when volume characteristics are such that it is trading on such a thin volume and it keeps going higher every fucking day, it is not going to take many sellers to bring this shit down to its knees. Okay, guys, next one, AVGO. Okay, same thing, right? Some good size buy volume, but what happens next? At the top, people are taking profits. Okay, and you can't blame them for it. Okay, people are taking fucking profits. Here's your big, beautiful, okay, bear volume bar, and they're selling it consecutively for multiple days. And now you get this pump, and the pump happens on what? On tiny, tiny volume. So, I mean, if you're not brave enough to short this, I mean, this is pure bear divergence. Again, it does not guarantee this thing is going to drop today, which it can. Okay, but it means in the near term, this thing will drop. Now, it could go sideways slightly, maybe pop its head a little bit, and then it's gonna collapse. But next time it drops, it's gonna be much lower than this level right here of 1620. So that's what it did last time, and they bought the dip. This gap will be closed. All right, so 1450 in the next couple of weeks wouldn't be a shocker. Hey guys, the truth is we could be going chart after chart after chart of a lot of popular tech stocks, and all of the chart is looking like this, okay? But this is what happens next. So this is ticker NOW, Service Now. All right. This is a big time cloud play. Ton of institutional investors love it. So this is what happens from 800 to 766. And this is just the beginning. So all of the charts, just like I was showing you the Apple chart, it looks like this now. Well, this is how Apple could be looking tomorrow. This is the next move, okay? Because look at this. I mean, this is same characteristic as I've shown you. So here's your volume bar, okay? That the sell volume highly exceeds all the buy volume. Last, month and a half, it goes higher almost every day on tiny volume. And ultimately, it resolves in what? It resolves in this move right here. So it doesn't matter. Actually, it does matter how crazily institutional investors are involved in the stock. Because everybody owns, for example, this one, just like everybody owns Microsoft and Apple and NVIDIA and so on. Which, by the way, NVIDIA still can't reach back to the highs it had recently. So this is your perfect chart. I mean, this is the easiest case, right? Same chart, shitty volume. On the buy days, you have very low volume. On the sell days, you have much higher volume with a couple of small exceptions. But all of this stuff, guys, what does it resolve? It resolves in a sharp drop when the media coverage is at the max. It is at the absolute max. Everybody cannot see straight. All they want to do is they want to buy that stock, and that's exactly the point when it drops. So we have not seen the reversal in some of the stocks I've shown you, like Apple and Microsoft. But there is top 3 stocks on our list right now, which I don't have the time to cover in this video, that will go 50x this week and next week. On options, on put options. So if you care to know what they are, they have not made this move yet, but they're about to make this move. So if you're curious to know what they are, guys, go to 13mmtv.com, 13marketmoves.com, sign up right now, trade it with a coach. Don't miss your chance to go 50x in the next 10 days. Let's roll.